All right. Good morning, everyone. I'm going to be recording a session today governing Friday's review of May 17th's price action. And I'll be taking a look at analyzing Asia, London, all the way up until New York as I prepare for trading London session in the coming couple of days. So we're going to talk through that today and take a look and see what kind of stuff we'll see there for Friday. So we are going to solely focus around this whole area from the opening of the day through London open kill zone all the way up until New York pre-New York session, and not much beyond New York that we'll have to go into because I'll focus primarily on the London side of things. So let's go ahead and get at it. I think for this one, I'm gonna take the 1 minute chart and use this because it's gonna lead to a few more better analyses, and I'll show you how I go about studying, going back test on a day, and identifying some of the plays and structures that I look for throughout the day, using ICT concepts, of course, as I am an ICT trader. You don't have to know ICT, but it will help you greatly if you've gone through that content so you know what language I'm speaking. So if you are new to Inner Circle Trader concepts, go back and study it first. Don't watch this video. Go back and study it first. But we are going to expand this chart so that I can look at specific periods of time. So you'll see a little bit of lipstick that I've applied here. This is something that if this were all blank, I would still be applying this. So we know that the end of the previous day, we had a low of the day right there. So I would have that marked out throughout the rest of time. Whenever there are, technically I could have marked each of these as well, but in the event, let me see if I can duplicate this tab briefly. And let's make this into a 15-minute chart so that I can refer to the 15-minute chart here too. So let's say that I wake up in Asia. This is all I have. This is the data that I have from Asia session, and I'm up at 2 in the morning, maybe 1 o'clock, 2 o'clock in the morning. Let's say we're prepared at 1 o'clock, right? So this is all I have. So what have I marked out on the 15-minute chart? I've marked out short-term low, short-term low. We note that this short-term low never got to that short-term low, and we have a short-term high, relative equal highs, which was breached in Asia. And this as well, this short-term high had not been breached yet, assuming we woke up at around 1 o'clock. So we're going to take that in mind. It should be 15 minutes. Okay, so we're going to go down to the one minute chart. And after we've done that on the 15-minute chart and identified short-term highs, short-term lows, and we know that Asia's already passed, so we know that this same stuff here has been marked on the 15-minute chart, as you can kind of see here. These short-term lows, especially short-term lows that took out other short-term lows like here and here, these two got taken out by this one. This low is 18,644. This low is 18,641. So this low technically was not taken out by this one here, but this low here, 45, was also taken out. So relative equal low is taken out there. This is importance, important low. So let's go down to the 1 minute because then we can kind of see a little bit better what kind of setups are here. So this is assuming around midnight, 1 o'clock, you wake up, you get ready, Asia ran. You might not have caught this because you might not be awake at 12 o'clock, but maybe you had taken a nap, woke up at 1 o'clock, and now you're charting. So now we can clearly see that there's buy side liquidity above us. Sell side liquidity has not been taken yet, but buy side has here. So we're expecting to see buy side liquidity taken first. because sell side has not yet been engaged and buy side liquidity has been taken. So in this event, as we get closer to 2 o'clock in the morning, so you've charted these out, you're waiting, you see this happen. So instantly, what I'm thinking now at around 2 o'clock, I'm thinking, okay, this looks like a run on stops. So I'm going to be looking at a simple model where we see a stop run. Then we see a short-term, we look for a short-term low to form, and we see one form there, right? So we see a short-term low form. I'm looking to see if there's any fair value gaps here, and there happens to be one up here. So I will mark this fair value gap here. You don't know that price has come up here yet, but you have this marked as a sell side imbalance. So this is all you see right now, right? So you see this short-term low form. So my first point of entry would be to look for a sell right there at that fair value gap. I would prefer this to remain open, to be honest, but we would set a sell limit order here. And if it gets engaged, it gets engaged. So right there, this is where this candle is where we would get engaged. And where would our stop loss be? Our stop loss would have to be above this high here. Now, you could set your stop loss above this candle, and you would not have gotten engaged on that. But this would have moved too fast for you to set that stop loss. Unless you had set it right after this candle formed here with this third candle rising up. So stop loss is here. Sell order, limit order is here at the high of this, or the low of this sell side imbalance. We see that gets engaged, and we see that that would be the earliest entry because we hadn't seen a short-term low be formed yet, but we did see a sell side imbalance get engaged and displacement below. So typically I wouldn't take this entry because I didn't see a short-term low get created. So we're going to remove this entry from our logs because we don't know if this could continue higher. We have not seen a shift in market structure lower yet. So I would instead wait to see this. So this now forms what we would consider a change in state of delivery. Okay, so we've got a change in state of delivery here. And we know that because we see this low got taken out by this low. So lower high and lower low. Higher high got formed here. Lower high got formed. And now we have displacement with a sell side imbalance. So this would be my core area where I would be looking for a limit order right set there. Okay? So what happens now? Do we see price trade up to that? We do. So this is where your limit order would have been set and triggered right there, with your stop loss having to be above this short-term high at least. So what would happen here? We see the price goes against us. We see that price drops a little bit. And what happens here? So if we had our stop loss here, we got stopped out right there. There's our first entry. And from our entry right here, because we had a limit order, up to this level there, let's assume we had our stop loss set right above this 50 at 71.75, right? So that would mean that we would have risked, oops, what's going on here? We would have risked about three handles and gotten stopped out there, right? So now it's possible that it runs all the way back up, but we have a bearish bias because buy side was recently taken and sell side has not been engaged yet. and we're in the London kill zone. So we continue to wait. We look for our next setup, right? So in this case, we are looking for the next displacement below a short-term low. We see that this short-term low forms and this big dark candle forms here as well. So right then and there, we would choose to engage on this candle after seeing this entry here. So this would be our next entry. So we would go short here. Ideally you get up at this high, but if you're late on this, that's fine as well. But that would be our next entry. Any entry around here would be sufficient. Even if you got the low end of that candle, you would still be okay on that because we see this as institutional order flow entry drill. And so we're still above this buy side liquidity. So any spot around this area is still reasonable because we see a high, low, higher high, and we're looking for a bearish breaker to form on this candle here. So let me go do, let's see this here. This is now considered a bearish breaker. So we can mark that as well. And this is all something that I would be marking in mentally. This is only because I'm backtesting that I'm marking these out for future journal reference, right? So you have a entry any point in this breaker. So we see price trades lower below that breaker, even below this first relative equal low here. Does price trade back up to that breaker? And now we have a mitigation here. Yes. So now what can you look for? Well, you have a few different targets, but let's say you got the worst entry here. It's 18666. You want to at least target 10 handles of movement. Is there a target that would be 10 handles of movement? Yes, there's an intermediate term low here. So this would be your first, very, very, very first target if you are afraid of, you want to take profit, you want to scalp. This would be your very, very first target. 10 handles, reasonable. You can take profit off at that time. And that would be a good place to take. Let's say if you had 10 micros on, you take 5 off there. Great. You've then achieved from 18666 to 18654. You've achieved about 12 handles of profit there on half of your contracts. So then you let the rest of them run. Where else can we possibly target next? Well, there's this sell side liquidity, this sell side liquidity, and ultimately the previous session's sell side liquidity as well. So we want to target, and maybe I can mark that out as well. So these were Asia's lows, Asia session lows. And it would benefit you to write these out early on if you don't remember what these are. And this would be previous PM, previous day PM session lows. Okay, so you have this kind of like tackled there, and then you have the PM session lows, so you can see this as your price unfolds. So you've taken profit here. Awesome. Now you're looking to see, does price return back to a sell side imbalance here? Yes. Does it have a mitigation here? Yes. Does it have to go down further? No. But you've taken half of your position off. So either you can try to pyramid here, or consider that, depending on whether or not you're still in a premium, and we're going to show you that you can still be in a premium here. So we're going to swing grade this dealing range that we're in right now. And what we're going to do is we will mark out what is considered discount and what is considered premium for the time being. So we'll mark this as green. Let's make that a little bit different there for the premium side. And then this can be discount. So this can be the, I should probably make this the premium, the discount side, and this the premium side, actually. Let's keep it consistent with our SIBIs and buy side imbalances and sell side imbalances. So any movement within this range, so we've dropped down to that 50% mark and came back up. So we're still in a premium here. So is it possible for us to pyramid in at this point? Yes. Even at this point, if you're quick enough. First stage distribution, return back to that, and original consolidation, and we market maker sell model to that. So now that we're back to this dealing range, we have a couple more targets to go. Our next target is down at the next Asia lows, and we see price move up and down, range a little bit. We have not moved our stop loss. We've moved our stop loss to at least break even. So wherever our entry was, we moved it to roughly around here to cover commission costs. But we're still holding the rest of our position for the full move. And does price get down to there? Well, it almost does, and then it breaks through both of those Asias. So you're having limit orders. Maybe 3 contracts come off here. 1 contract comes off here. So now out of the 10 original contracts, you have 1 more to go. So what happens? Do we reach for that last prior day session low? We do. So this is where the last bit of our contract should come off, because we don't have any other targets yet based on the most recent sessions of data that we have. So we're assuming that, hey, now that we've taken sell side liquidity, could it head lower? Yes, but could it also reverse? Well, let's wait and see what happens here. So this is where, if we identify key areas to take profit, this candle would have been, I think this candle would have been 1 profit take. Probably you would have triggered on this candle and maybe this candle. And then, of course, the last one being this candle. Your limit orders would have triggered all the way there. So what does that mean then? What does that mean in terms of measurement of what that type of move would have gotten you? So we're going to assume you missed this entry and assume you got this entry instead. Okay. So the first range would be 11.5 handles, right? Second range, so that'd be 5 contracts off there. Your next one would be down to here, right? Oops, that's not what I wanted. So your next take profit would have been triggered at this limit order here at 22 handles. And your last one, second to last one, would have been triggered at this Asia low. What's going on here? I keep hitting this wrong one there. Sorry about that. So at the next Asia session low, remember, we're targeting the worst possible entry here. 24 handles. And then lastly, we have 1 handle exited at 34 handles. So that's already an incredible day of trading. With 1 contract, that's probably roughly, about $400, $450 of profit on 10 micros, which is 1 NASDAQ. So now, because we've reached this, we're now looking for, does this form like a bullish breaker of some sorts, and we see a reversal pattern? Do we see a continuation, or do we see a change in state of delivery here? So that's what I'm looking out for now. Do we see something that changes the state of delivery? Well, we see price continue lower and lower and lower. And we see price see a low there. We see a high formed here. We see price continue lower. So we're thinking maybe it can continue even lower than that. But we're skeptical of it at this time because we've taken out sell side liquidity, right? So once we start to see price move like this, where we have a low, high, lower, low, we are expecting this to be potentially a bullish breaker. So what do we see here? We see that this low has a short-term low form here, short-term low form here, and this doesn't get below this low. So we're starting to see accumulation in this area. So we're waiting to see from this original breaker, do we see price displace to the upside or rise up to the upside? We see in the few minutes from 440 to 450, we do see that this is breached. So now this serves as a bullish breaker. So this is what we're kind of forming in our minds, right? That this will serve as a potential bullish breaker here. And now we're looking at these prices, these things here. We see that there's a fair value gap here. We might have missed it, and we're hoping that we get a limit entry here. But does price head back down to it? Well, there's a chance it could. But we see also that this down close candle and this down close candle, these are being supported right here by this fair value gap, and this is going to be treated as potentially a breakaway gap. So this we might expect to be a breakaway gap, and we would expect that price does not retrace to this, or we might think in mind that, hey, this is a fair value gap, but it's a breakaway gap, so price may not ever come back down to it. So what am I looking at next? So as we see price head back down to the mean threshold of this bullish order block, and we see a hold there, once we see that happen, we can target this bullish order block here, and we can target that order block there, and with any down close candle into that order block that we see, that's when I would then be looking to go long. So this would be our first long here, and we would expect that price does not close back below this mean threshold of this bullish order block here, especially since we breached this bullish breaker. We want to see if price trades above it. Maybe when you see price return back to it, you can pyramid one more entry here. And we see it return back to the bullish breaker here. So we see this as a propulsion block. If you haven't studied ICT, then go study that. I'm not going to tell you what that is or how to find things of that nature. But now that we see price return to that bullish order block, you might have 10, 15 contracts on at this point in time. Where are our first areas of profit? Well, we have the relative equal highs that we've listed out here, relative equal highs we've listed out here, this consolidation here, and ultimately these highs up here. I've only marked this one here for an example, but you'll see why. So when we go to the 15-minute chart, we see that we have, once we took that low out, we have this relative equal highs up here. We have this high. We have that high as well. So those are some of our core targets that we're looking for on a 15-minute time frame. So back on that 1-minute time frame, we have a bullish reversal here, change in state of delivery, right? Right there, change in state of delivery. We see price come up here. Fair value gap forms here, does not come back to it, and just blows up into where? Our first target right here. So this is where you would take off half of your position here. So we would take off half of our position here. Oops. I think it's control Is it Control F9? No, that's not right. Alt F9. There we go. So your first profit target would be here, and that's where your limit order would be triggered by triggering these relative equal highs. So at this point, you can move your, you would have entered around here and here, right? On the returns back to this order block, bullish order block. You have this propulsion block here. So you can then take entry at the top of this here. Your first target is taken here, so your stop loss is moved up to here. Even when you enter down here, your stop loss needs to be at least below this short-term low right there. That's where your stop loss needs to be at minimum. So when we see this happen here, we see price come back down a bit. Sell side got taken. Previous fair value gaps got targeted. Sell side got taken again. If you are of the impression that it is going to run for these relative equal highs and these relative equal highs, you can pyramid on that movement there. We see price continue higher. Price retraces a little bit. We see price continue higher up for our next target, which we would have then tried to take profit at. You might not have gotten filled here, but on this one you would have gotten filled. So that would be our next fill. And we see a fair value gap got left here. We'll see, does price return back to that fair value gap? It does. One thing to note though, similar to how we gauge the range from that high to the low, now we have a new dealing range that we're working with right here. So you have a new premium and discount that you need to take into consideration. So we have this high, first, the top half of this, and we have this bottom half here, which is a discount. So if you can get in on this buy side imbalance that you see here, that would be your only point of pyramiding into strength, because at this point you're above equilibrium. So you don't want to be pyramiding at this time, because you can definitely just see this drop out immediately, right? So you've taken, maybe out of a 15 handle position, you've taken 8 off, you have 7 left. You take 4 off here, you have 3 left, and you're waiting to take the remaining off up at this key, or maybe even at this level down here. These relative equal highs right here, very suspect, right? So let's see what price ends up doing. So price never goes below that short-term low for now, and we see it continue higher for this next area of liquidity. So there. So your third take profit might be here. So out of the 3 contracts, maybe you take 2 contracts off, you're left with 1 more. Does price run for our high here eventually? It does, right there. So you'd be out of your position, relative equal high got taken. Even you could have saved one for this one up here. That would have gotten triggered here as well. So you have entries here, and you've got a London setup that you would have had to wait out until about 7, 8 a.m. for this to continue and form. So remember, this is all on a 1-minute chart, right? So what would that profit had been, assuming you entered and got the worst entry at the top of that bullish breaker? So the first set of profit taking would have been from here to there. That's 18 handles of profit. The second level of profit taking would have been from here to here, and that is 29 handles of profit. The third level of profit taking would be from here to here, 35 handles of profit. The fourth profit taking would be from here to here, 42 handles of profit. And note how, yes, you could pyramid as long as you're within this dealing range discount area, but once it comes to a premium, you want to be just letting your profits go and taking profit, raising your stop loss after each new high gets taken. You can raise your stop loss to the next short-term low. So that is what I'm going to be looking for from when I frame out a London and Asia trade. I'm going to go look to see what liquidity got formed during the PM session of last day. I'll be looking at what liquidity formed in Asia session, both buy side and sell side. I'll be looking at it on a 15-minute chart so I can see where the intermediate and the short-term highs, short-term lows are, the key ones at least. And then once this occurs, that's going to help me plan out what the session for London is going to look like. So here we would have expected buy side to get taken first, and then we would have looked for sell side to be taken. Now, could it head up higher and tackle maybe this set of liquidity here? Possibly. But based on yesterday's Thursday reversal, we saw big black candles. We did not see buy side get engaged at all. So we're assuming that this means we've got a Thursday high of week, and lo and behold, the short takes us to another low. We trade high. We see that price engages this high, and it does not engage this high up here, as we would not expect it to, even though that is buy side liquidity. Like, I'll mark this out for us here so you can see what that looks like across the screen. So buy side never gets engaged over here. Once we take out this high, that's our Judas swing. And if we go back to the 1 minute time frame, so once we take out that high right there, that's when we start to identify and figure out, hey, what's our setup? Because our buy side liquidity just got taken at this high up here, right there, right? So this buy side liquidity has been taken now, and we're looking to see what forms as price goes into 7 o'clock, 8 o'clock. We know that there's time distortion that has to happen here. So the question will be, as we're looking at this chart, this is all we see. We took profit. We see that these items also got reached for and taken at that time. So now we're looking to see if we see displacement lower below a short-term low. Now we see something like this, but we have some other short-term lows there, so we're skeptical of this type of a run. Now, if you did try to get in on this, that's totally fine. Let's take a look at what that would look like, right? So let's assume that you set a limit order. You got a limit order here, and you set your stop loss above here. Well, if you set your stop loss above here and a tick, you might have gotten tagged here. Let's assume you got tagged there, right? What's that stop loss stop out? So it would have been from here to here. So that's about a 4.5 handle stop. So it kind of sucks, but it is what it is, right? So we know that this isn't a prime time to be taking trades, right? Because we have 8:30 and 8:30 and 9:30 ahead of us. We want to see what happens at 8:30 because we don't want to keep getting stopped out here if price decides to go higher like it does. So right now we're waiting for 8:30 to come around. We're looking to see if there's any form of true distortion lower and displacement lower. We don't see any at 8:40. We see us kind of continue to creep higher. This, we're watching to see if there's major displacement below this here. And as we get closer and closer to 9:30, we start to think, okay, maybe this is a breakaway gap here. Maybe we displace lower, but I want to see big displacement. And lo and behold, as we get closer to 9:30, we see this giant candle take out all of this movement here. So on the 1 minute chart, you have this 3 candles here, and you see price. You already are thinking, okay, let me see if price does come here. Let me set a limit order here and see if that gets tagged, because that looks like it's going to be a fair value gap. So it gets tagged here once, and price sends it all the way up to 71 from 65. So this is getting into New York session now, right? So when you think about New York session, you need to think about, okay, well, if my entry is here, I probably would have gotten tagged if it came back up into it. So you would have gotten tagged on this candle. My stop loss would have to be up above the most recent short-term high. Now, you could put it above this, but you would have also gotten probably tagged by this quick move here. Maybe not if you're too slow, but the safer stop would be up here, 78 from 65. So that'd be 75, 76, 77, about 12, 13 handles. So if you put it up there, typically you're not going to get stopped out as badly if you're trading in the right bias direction. So then you see that you have this 1 minute fair value gap here. Yes, on the 15-minute, eventually there forms a 15-minute gap later on to be referred to. But at this time, you don't know that this is a gap, right? You only see these 1 minutes form something like this here. So when this forms, you're entered there. You see price head lower. You've got a few areas of take profit. If you entered at 65, you want to look to see if 55 has a profit taking target. Yes, 10 handles, boom. That would be a target. So you could take off half your position there. This would be your next target down here. It hits that as well at 45, so another 20 handles. And then you can then also target the rest of London's lows too. Now, Friday was particularly interesting because there are so many take profit levels to be had, and price retraced pretty heavily back up into sell side imbalances, internal range liquidity, before heading lower. So lots of opportunities to lots and lots of opportunities to remain within the trade itself. And of course, if we set our dealing range to be this dealing range here, we now have a new premium. After taking highs and after taking those short-term highs there, we created a new dealing range. So this now is our dealing range, right? So within this dealing range, where are we in premium? Are we still in premium here? If so, if price trades up to a sell side imbalance, we can take another short there. So here we can take another short when it comes back to this sell side imbalance. Your stop hasn't moved yet, so you haven't gotten triggered. And you can add on pyramid at that time. Now you've got this as a short-term low to take profit at, combined with this short-term low to take profit at. So that would allow you 65 to 30, almost 35 roughly. So roughly 30 handles there, all during the New York opening range. So what happens? Do we end up rushing down towards this? Yes, we draw towards that. But if you remember, we see this change in state of delivery really quickly there. And that was a really vicious retracement here. So you can kind of see how price ends up trading up into this area. Now, when we go into the 15-minute chart, this is where you see on this 15-minute fair value gap here. That's where you want to refer back during the day to any 15-minute fair value gaps, because look at what happens here. Price trades back up into that 15-minute fair value gap and ends up coincidentally moving lower from there. We see a high, low, higher high. You see movement below there. We see a movement back up to that mitigation block. Trades lower, comes back up a little bit, ends up trading almost to that high and fails, and then ends up trading lower in the afternoon. So, but we're probably done by this point in time. Keep that in mind. So there were two really, really great sessions here. And so I want you to take a look at just the London and Asia sessions alone. So you have these core areas of liquidity here. So you can kind of see how if you're trading the price action only, trading in a premium, finding your setups here, looking for confluences in this area, taking the trade, taking profit at key levels, right? Then watching when price hits key levels, watching for retracements here and doing the same thing, market maker buy model, market maker sell model, market maker buy model, doing the same exact thing. This is what I will be looking for across London sessions. And I'm going to backtest this even further across many days, but I wanted to give you an example of what depth should your backtesting look like and what kind of, commentary I have in my backtesting when I take screenshots of sessions, when I take screenshots of what setups I saw in the past, what they look like. This is what I do, especially when I start to fade away and I stop doing this as detailed and as strictly as I am doing right now. This is what I go back to remind myself, hey, I've done this before. This is what I want to make sure that I am doing on a regular basis to remind myself, hey, these are the setups that I see all the time. This is what I'm looking for. This is one of the setups. There's a few other setups that I use, a few other models that I use to add even more confluences to what I look for in a trade. But those are a lot more advanced. You don't need any of them. I like to leverage some of the other models just to find more confluences. The more confluences I have, the more the cleaner my logic gets and the cleaner the actual setups get. So I hope this has been helpful. If this has been helpful, give it a like. Appreciate it. And comment down below what was helpful, what wasn't helpful. If you thought this was garbage, you can comment there too. I appreciate that. I'll learn from anything. But I hope this was helpful. Oh, the other thing, some of you might not know, but some of my price, like these colors in the background, I keep them because I enjoy a visual indicator of when these sessions are. So when London session, I know when that is. Asia, and then New York open, London close. I like having those on my calendar. So yeah, that's it for today. I hope this was helpful. And if you enjoyed this, give it a like. Again, appreciate your time. And I hope this was helpful. Let me know if there's any questions down below, and we'll catch up soon, okay? Take care. Thank you.